Hi Akash, please go ahead.
Okay, good afternoon, guys. Let us start. So, as we all know, uh, when we develop some software or we test our software, we have certain conditions for all the decisions. That if some condition is there, if it is yes, then something is going to happen. If it is no, something is going to happen. So, same analogy goes in market also. What if I have planned to exit a stock at 400 rupees, but the stock is opening directly gap down at 360 rupees? What will happen then? What if I have planned to enter a stock at 500 rupees? I want to buy at 500 rupees, but this stock has opened today gap up at 520 rupees. What will happen then? So for every if in our plan or strategy, there has to be a condition, and that condition should save you. So suppose we know very well, say, what is the market cycle? A good uptrend where there are higher highs, higher lows, and then at some point it gets exhausted. Higher lows are not formed, and the lows start to get broken. Then we have a phase of somewhat sideways, and then a downtrend, again a sideways market, and then again after this sideways market, the market again plans whether it wants to go up or continue its downward. This is the most basic part, right? So we know, suppose we want to make a very simple strategy, very simple strategy where like no news, nothing is involved. Only we will play around with two things: risk to reward and probability, and enter exit conditions. So our whole strategy will be based on only these three things. That's it, not more than that. So say for this risk to reward, I want to say that we this is today's class. I am not going to discuss anything about demand and supply zones, because the reason being we are not continuous in our discussions. There has been a gap. So, and also I have not seen enthusiasm from you guys regarding the previous discussion. Also, there was no doubts or nothing as such. So I don't think it is like fruitful for me to go forward with that. So I will discuss something more basic and more general, which you can grasp into and also apply. So suppose risk to reward, for every investment, forget about trade, for every investment, I have to have a stop loss. I cannot say I will invest 10,000 K and I will remain very calm that okay, at max I will lose 10,000, it will become zero. I am not worried with that. No, that is not a good way to invest. There has to be a stop loss. We know that. So say for every investment, I risk 1 rupees at the beginning of the investment. So if my portfolio goes to -1, I will simply exit from that stock. And for that, I will aim from a 3x or 4x reward. So if I am risking 1 rupees, I want or I expect a profit of 3 rupees to 4 rupees at least. Let the probability of my success be 6 out of 10, or even worse, 5 out of 10. 5 will be my winning trade and rest 5 will be my losing trade. So for my losing trade, I am going to lose 5 rupees, -5. And for my winning trade, say 3x to 4x. Let me take the lower part, 3x, 3 rupees. So for 5 winning trades, I am earning plus 15. So overall, I am taking home 10 rupees, even with 50% accuracy probability. So this thing is only going to work if you are following the same entry exit conditions for all the 10 trades. You are not altering your condition. And how would you get the confidence of this, that yes, my enter and exit conditions are same? Then also will I be profitable? For that, you need to back test. You need to check, over different stocks, over different time frames, that, and you have to note down, you have to make a journal, you have to note down that yes, I have tested on these stocks and it is working. After that, that is not the end of the road. Once you backtest your strategy, you need to forward test also. How will you forward test? Now you will trade on real time using the same strategy but with a minimum quantity. Say you are investing only 5,000, 6,000. You are buying only 50 quantity, 100 quantity, and then you are checking the same strategy what you backtested in the real time. And when that real time investment is giving you the same desired outcome what you had tested in the back test, then you will be full proof that yes, now I am totally ready as an expert investor. I am again repeating whatever we saw in the beginning, that 700% returns, those are very unrealistic, and it has to be a very exceptional person to hold on to for that percentage. Say you can say out of 1 lakh, maybe one or two people is only there who can hold on to that 700% investment. And I'll tell you, God forbid this should not happen with him or anyone. Suppose he is still holding on to that profit at 700%, and it goes down to again 200%, he will panic and he will exit. And that will be the moment he will never ever wait for any stock for that much. The one time he will get stuck, he will understand that that is very, very unrealistic. So you guys have to understand, you cannot make every trade 200, 300%. You have to make a risk to reward ratio. Suppose my risk is 5,000 in this investment. So the moment I am getting 15,000 to 20,000 result, simply exit, take out your profit. By that time, you will surely find some other stock for the same investment strategy. And you need to keep rotating your money like a business. At one go, you cannot make your money so much until and unless you are like blessed with some very, very good luck from above, that you are bound to become a crorepati with one investment. That is totally exceptional case. So now let me go back to charts. Any of you, if you want some stock to analyze on our plan or strategy, tell me a name of any stock. Tell me, guys.
Kotak Mahindra Bank.
Kotak Mahindra Bank. So suppose, let us try to design a plan or a strategy for investment. Our investments will be mid-term investments. Mid-term. So a mid-term investment, we can like expect either our stop loss will get hit within 1 or 2 months, which means we will give whatever loss we have planned and we will exit from that stock, or we will get our results in say within 1 year. Mid-term investments, either our stop loss will hit in 1-2 months, or in 1 year we will get our that 3x or 4x returns that we plan every time. Okay, so our risk to reward is very, very clear. What will be our entry and exit condition? So let us plan something like that. This is just like we are trying to make up a strategy. Strategy can be built on any logic. That logic should be backtested and validated. That's the point. So suppose we know there is a downtrend and then there is a sideways. We discussed this in previous discussions also. We will again see this in more detailed way. So there is a downtrend. Let there be a sideways trend. After this sideways trend, we know very well, either it will again shift to a uptrend or it will continue as a downtrend. Only these two things will happen. Or some more days it will go to sideways at max. So we know very well, the moment we see a sideways market, if it has to shift to an uptrend, it should not go below this area, because the moment it again shifts down, it again gets converted into a downtrend. So based on this logic, we know if we try to invest here, we try to buy here, our stop loss will be strictly below this sideways market area, because we know if it has to shift the trend, it will never go below this sideways part. So either our stop loss will be this much, the sideways area, the risk, or if it shifts to an uptrend, we will get 3x, 4x rewards upside. So now you see, generally what happens, people invest on a stock and forget it for 4 years, 5 years. So if we are following this strategy, one thing is very sure, we are not wasting our time, because after a downtrend and a good sideways trend, we know that within 1 month, 2 months, the trend is going to change. We do not have to wait for very long, maybe 1.5 months, 2 months, or few weeks also. Either it will hit my stop loss, I will exit from this stock, or I will be in my favor. The trend will be in my favor. My money will not get stuck there. So we will try to look into Kotak Mahindra Bank. Let us go to monthly chart. So suppose someone investor wanted to invest here near 1500 rupees. Someone wanted to invest here after COVID period. He would have thought that now the bank will go up, he would invest here 1500. So what will happen? What would have happened? Suppose he would be in a good profit, and then it is in a sideways market, and almost 3 years gone. He could not have generated much return, 1500 to 2000, somewhat 20-25% returns. That's it. That's in a sideways market. So now we know very well that if we follow this strategy, this down and side, and then this up, our time loss will be minimum. So if you see here, already a good sideways momentum has been done. So now there is a very good chance, maybe few more months, and then either downside or upside, because this phase has been already covered. Let us see. Let us go to weekly, try to see something, what we can find out from here. So I'm trying to spot this part, a down and a side. I'm trying to spot these two parts. So if I try to spot it, not exactly I can see anything, somewhere here, a little bit downside, and then a complete sideways. So that's it. This much only I can see. So suppose I want to do an investment at this point itself, 1700. Let's take a whole number, say 1800, whole number 1800. I want to invest. So I know very well this sideways area is this part, 1650, or even you can take 1600, the lower part, more safe, 1600. So 1600 will be your stop loss, 1800 will be your entry. Your risk is 200 rupees. And what is the logic? Already we have seen a lot of sideways movement. So either if it breaks here, you will simply exit, or if it goes in your favor, you can expect at least 500 to 600 rupees upside, 3x, 4x. So 200 is your risk, 3x is 600 rupees. So 2400 you can expect at least from here. So this is one forward plan, what we did. Let us check going backwards if we can find something more. Let's go back. Let's back test. Maybe a good downside and then an upside. So here, let us start from here. 2011, because I can see a downward here. So suppose this is 2010. So in 2010, we see a good downward movement. After this downward, we want something sideways. So one thing always remember, any sideways movement, you will be able to contain that in a box. If you try to draw a box, that sideways movement will fit into a box. So you do not need to have to be very precise on that. The box should be very precise. No, it's just like looking through your eyes. You can make that sideways movement in a box. Any uptrend or a downtrend will never be confined in a box. This is a downtrend. You cannot make a box and confine all of it. Or if this is an uptrend, you cannot make a box and confine it. But this sideways movement, you can make it in a box. So we see a good downside and then a few sideways movement. From here, this part, you think it will go up. You invest here. After this downside, this is your sideways movement. This is the area of your sideways part. You keep your stop loss somewhere here, this much.
Because that is a demand zone, right?
Yeah, but since we have not discussed about that demand zone, we are just looking it through a very simple perspective. Just try to draw a box and then try to understand this is the sideways bottom part. Try to invest here, here, or somewhere here. And then from here, you can see 2 times, 3 times, are you getting or not? So now there can be one question. Since the chart is already drawn, it is very easy for me to say invest here and then you will get that return. What if this part is not there? I don't know what is going to happen. So it might happen that from here it is getting downward, again getting downward. So it can again happen that it can go downward. I do not know. So I do not know whether to invest at this part, or this part. It would have happened that these were not there. From here only it would have went up. Since the chart is drawn there, it is very easy to me to say. So now again you see, the moment we start to backtest any strategy, first you try to observe the chart, then you try to formulate a strategy, a basic framework. And then when you start questioning yourself, what if this is happening? What should I do? So for this condition, we need to have something more. So now if I go back to my concept, again the basic concept, downward, upward. We know for a uptrend, there are basically 4 parts. We can divide it into 4 parts. The first part, the second part, the third part, and the fourth part. So the first part is when you get an upside movement. Second is that dip. The third is the upside movement, which is almost equals to the previous high. And the fourth is that breakout. What is the characteristic? The lower part never gets broken in an uptrend. It can go deep, very deep, but this does not get broken. In some cases, say 1 out of 10 case, it might happen. You might come across like this also. But here what actually happens, say if this is a candle of an uptrend first part, this is my first part, say, then there is a dip, second part. In very, very rare cases, it might happen that your bottom is broken, but the closing is still above. And then it turns to an uptrend. This is an exceptional case. The lower gets broken very deep, but the closing is still above. So this is very exceptional case. We still consider it. We will see if we come across in our examples. For now, it is not there. So now, since we already know about this part, let me crop it. In which year we were? 2010. Somewhere here we were. Let me cut it again. Let me cut it from here. Right. So we are somewhere here. So if at this point, say we are at this point and we want to invest in Kotak Mahindra. So based on our strategy, can we invest? We cannot, because we want a downtrend, a sideways, and then a shifting pattern. So already downtrend has been there, sideways has been there, and the uptrend has already started. So our trade is gone. our investment opportunity has gone. We will not invest now. We will again wait for that down part. So let's see when do we get that down part again. Let us keep going. Each candle is of 1 week. So here, somewhat that down part is starting to happen. Let's wait for more. We want a good downtrend. Still it is in sideways. Now if you see here, many people will trade this on channel basis. This is a channel. If there is a breakout, we will buy. If there is a breakout below, we will sell. But we do not use channels because in our strategy, that channel is not there. We are simply trading based on downside, sideways and upside. So somewhat after this, can I draw a box and confine it? Yes, I can draw a box and confine it here. Now start looking for that opportunity. First part, second part, third part. Every time you find an opportunity after that, after a good sideways movement, you simply take your trade and keep giving small stop losses. We are going back to that probability 10 out of 5. So if you see here, your first part is here. So second part is starting to happen. Now we do not know how deep this will go. It can happen, it can move from here, or it can happen, it can go a bit more deep, and then from here it start going up. So we need to wait. This, we know this is our first part. The second and the third, we have to wait for it to happen. Try to draw the parts first, second, third. So now there is again one exception. This was our lowest point. It broke and closed above. So again, someone can ask me, why you are starting from here? You could have started from here also. First, second, third. That's a valid question. But we know the first part has to go up straight forward. If it is breaking like this, if it is broken, that trade would have been, would have bought here. If you would have tried to take a trade here, this first part, second part, third part, you would have bought here with this as your stop loss. You would still be in your trade. That this trade would still continue here. If you are unable to understand, please stop me. I will again explain what I try to say. So suppose I started from here. So this is my first part, my second part, and my third part. Say I am buying now. I have bought. And my stop loss is here. Near 210 is my stop loss. And my buying price is 245. Let us round off. Let's say 250. 40 rupees is my risk. Let me draw a line. My risk, my entry, 250. That's it. So what I expect now, I expect that there was a downtrend, there is a sideways trend, and now I will play with the probability. Every time I see a first, second, third part, I will buy on the third part and I will keep my stop loss below it every time, because I do not know how much more it will go. I know it has gone quite a bit. So maybe from here itself or some more days back, it will take. So I will play with the probability. So now let's see. If my stop loss is hit, I will exit. So see, my stop loss is hit. So exit. Exit minus 40 is your loss. Mark it. Minus 40 is my loss. This trade is finished. Again, I will wait for the first part, second part, third part. So first part, it hit my stop loss, again went up. So no need to scratch our head. This is the part of the probability. The moment you see your stop loss is hit, you have to exit then and there. You cannot play with your emotions. First part is there. Let's wait for the second and the third part. So that's it. First, second, and the third. Very quickly it came. So here itself we entered. Again at 250 we got our entry. And your stop loss is here below the third part. 240, say 235. If you want to be ultra safe, you can keep your stop loss here also. But I do not want to be ultra safe because I know first part, second part, third part. If I am buying here, I want my stop loss here only. I want to play with my same strategy. Again, if it becomes red, I will again exit. So now here 15 rupees is my stop loss. Again, let me mark my area. 250 is my entry, then near the third part. And 235 is my stop loss. So I am aiming only for 3x or 4x, not more than that. Not more than that. So if this is my 1x, this is my risk, then maximum 3x I want, not more than that. That's it. I want this much only. Because in my strategy, in my plan, I have calculated everything that if I risk 1x, I want 3x, 4x. My risk, my 5 out of 10 is only my success. Only 50% is only my success. But my entry exit reasons are same. Those are not different. Now let's move on. Sorry, let me adjust it. And we will also look into the time, how much time it is taken to reach to our area. So almost here itself we would have exited here. Almost your target is there, 1 rupees or 2 rupees short. Let us make it more width, a bit more wide, totally sideways, and somewhat exited. So now again there would be one doubt. Here 1 rupees was left. Should I have exited? If not, then I would have again wasted from May month to July month. So I will tell you, think of it as a real time. In real time, in live trading, you would have invested near February and near May month. February, March, April, May. February, March, April, May. 4 months has gone by and you are only 1 rupees from your target. Tell me, towards the day end, what would you have thought? Should I exit or should I still hold? After 4 months, I would not have waited for that 1 month, that 1 rupees. I would have simply exited there. That yes, target is done. Let's exit and just finish. So logically, we would have exited here only. Even if we have not exited, still we got our target. That is a different thing. I do not want to talk about this because on chart everything seems to be very easy to explain. But waiting for that 1 rupees for another 3 months and scratching your head, coming down so much on a real time, that is something else. So when you trade systematically, both thing will happen. What both thing will happen? It will hit your stop loss and it will go up and you will scratch your head. Oh no, if I would have kept there, I would not have exited. And if you would have waited for your target for 1 rupees, it will go down and you will again scratch your head. So as a professional trader or investor, we should always understand that waiting for 4 months is worth more than waiting for that 1 rupees. Simply exit there. That's it. Finish. So what happened? We gave 40 rupees here, loss. And somewhat here, I don't know how much we gained. I did not calculate. 51 rupees. So 51 rupees we got here. So this is about only one stock. Only one stock. So obviously, if you are having 10 lakh rupees, you are not going to invest everything in Kotak Bank. 10 lakh, you will at least divide into 3 stocks. 3.3 lakh, 3.3 lakh, 3.3 lakh. So if one is hitting your stop loss, this money is free to be invested somewhere else. If one you are invested and you are still holding on to it because your target has not been hit, that money is locked. And if one has given your target, again that money is free to be invested in some other stock. So your money keeps rotating, and when you go through this same strategy over and over again, even if you give 5 to 6 stop losses back to back, that one trade will fulfill all your losses, everything. So let's go forward with Kotak Bank. So we know very well Kotak Bank has gone up to 1700. Now it is at 300. So everyone knows today or tomorrow this will go up only, right? But in between that, it will go down also, side also, up also. So we want to trade those opportunities also, invest on those opportunities also based on mid-term. So let's remove everything. And now again see when we will get another opportunity. So for another opportunity, we need to have a downtrend in Kotak Mahindra. But now it is not in a downtrend. It is somewhat in a sideways. Again, you draw a box, you can see a sideways. An uptrend, a sideways. Now the market can again decide whether it wants to go up or go down. If you want to again trade it, you are going against your strategy. Say, for an example, say this is your first part. You see a red candle, and then you see a green candle like this. So the first part, second part, third part. Based on this, we can again buy, keeping your stop loss here. But should we do that? We should not do that, because in our strategy, we will use this part only when this is fulfilled. These two parts. This comes later on. So someone will say riding with the trend. We should ride with the trend. So every time you see something like this, and then you see a first, second, third part, you ride with the trend. That is totally a different discussion. A same investor can have multiple strategies. So you can have one strategy for this kind of a market. You can have a strategy for this kind of a market. You can have a strategy for any kind of market. But you need to have a clear understanding that what market is showing me, and based on that, what strategy should I use. So right now we have not discussed about riding with the trend. We have not discussed about that. So we are not going to put our mind into that. We have just discussed down and side. Part by part we will move. So now we will wait for a downtrend. We want a downtrend. If the stock is going up, let it go. It doesn't matter to us. We will screen some other stocks. We'll try to see something else. So here it is riding into an uptrend. Let it ride. Let it go. We want a downtrend. So how do we check the downtrend? These are the uptrends. So one more thing, what I was talking, remember I told there are exceptional cases. This is the lowest point. This was not broken. If you see here, this lowest point was broken for a while, but the closing was above only. This is the exceptional case that I was talking. This sometimes do happen in an uptrend. And then again, it went up. So from here, I can see that fine, this uptrend has exhausted, but we will not consider it as a downtrend yet. We need this to be broken. It should like go up a bit and then break it. Then we can consider it as a downtrend. We will see what happens. So we talked about this. It should go up and then again break it. Then we will consider as a downtrend. Else we will still wait. So each candle is of weekly. So keep a track of time also. How much time has passed due to waiting period. That also we need to understand. So since we are discussing this and looking this from a perspective of investment, so we have to look to the broader time frame. We cannot look into 15 minutes, 1 hour, 3 hour like that. Let's move on. some good downtrend. We are still hoping, but we cannot see any downtrend. Still a sideways, and then again it is going up. So in the topic when we will discuss about riding with the trend, at that topic we will again be able to catch all this, but not now. Let's move forward. Waiting for a downtrend, cannot see, still up, still up. Okay, again what we see here, a good upside and then a sideways trend. So now again very soon either it will move up or go down. So for our strategy we want it to go down. If this breaks, then we can say we are in a downtrend. Else it will continue in an upside. So almost 2014 gone, 15 gone, 16 gone. So for 3 years, as per our strategy, what we made, we are still not able to find any trade. But if we track this and then a box and again riding with the trend, then we can again get multiple entries here. So if you see that first, second, third part, first part, second part, I'm just talking randomly. That you will, when you are going to have multiple strategies, it is not that for 2 years you are sitting idle. You will get trades also. First part, second part, third part. You took your entry here. You kept your stop loss here. And why here? Why not here? Because you waited for this sideways. And then here you took your entry. Your stop loss was hit. You exited. Again, this is not the first part. This is below. If I take this as first part, second part, and third part, here also there is one trade, or maybe first, second, and third part. Again, you are getting entry here. So multiple times, keep taking on the same strategy and try to ride the trend. But we will discuss it in the upcoming sessions. We are still waiting for a downtrend. Okay, now let's see if this has converted into a downtrend. Let me check if it is converted into a downtrend. So we were moving like this. So this was the highest point, unable to break the highest point, broke the low, and now again breaking the low. So somewhat we can say, okay, the downtrend has started. So if it goes for some more time and then a bit sideways, then we can have our entry condition, the first condition. So let's move along. Still no entry condition, because what we expected we could not get. Again a very good uptrend. We want a downtrend, we want a downtrend. Still no downtrend. Still no downtrend. So here if you see, this is not a trend, this is a rally. What is the difference between a rally and a trend? Rally is back-to-back movement of a stock, upside or downside, and a trend means slow and steady movement, say 45-degree movement of a stock, slow and steady movement like a wave. So this is a rally. Moving forward, after the rally, can we draw a downtrend? Let's see. Yeah, somewhat we can draw a downtrend. So if we have some sideways and then we see the first, second part, we can again try to take a trade. But first we need to have some sideways. So there is no measurement as such. Generally, whatever downtrend you are seeing, even if 30-40% is sideways, say this was your downtrend length, say 30-40% sideways has already happened. After that, you can start to take your probability of that first, second, third part. Simply, I mean that in V-shaped recoveries, we do not trust. We do not trust V-shaped recoveries. It might happen that the stock can go in a V-shaped recovery, but we do not trust. We want that sideways. So can we term this as a sideways? If I try to draw a box here, not that much. Yeah. So if I see here now, this part I can term it as a somewhat sideways. Right. So this part somewhat sideways I can term it. So I need first part, second, third. If I see a third part, then I can try to initiate something. First, second, third. Let this candle close. Right. I will take one trade here. Keep this as a stop loss, and I will enter here, the top part. The first, the second, and the third. So my stop loss is very, very minimal. Very, very minimal. If someone wants to be very safe, he can keep it here also. Because it might happen, it can get broken, and from here go. If you see Karthik ji, here there is a very good demand zone. But since we are not discussing that, we will not go to that. Stop loss is hit, we will simply exit. And also the target, remember, 3x, not more than that. I don't want anything more than 3x. Or 2.5. Yeah, 3.01. That's it. If we get it, fine. Else we will exit with our stop loss. Now keep a note of the time also. Somewhere March, April, somewhere we started to invest, and it has almost been 1.5, 2 months are gone. So, okay, what I will do, I will simply shift my stop loss to cost to cost. What do you mean by cost to cost? The next time this stock falls to your costing price, you will exit. I don't want to bear this much loss after holding it for so many months. Either I will take my target or I will exit cost to cost. I do not want to give my stop loss. Again, that is a personal preference. Some people do not want to shift their stop losses. Some people do shift. Say if you are planning for a 3 times return, you are already getting 1.5 time return. At this point, people think three types of people are there. One, people are there who will be in a hurry. Even if they have planned for 3x, they will exit in 1.5 only, totally going against their plan. Another kind of people are there who will book some kind of profit. Say they will book 30% of their portfolio profit, 40%, that some profit should be there. And another kind of people are there who would shift their stop losses. Again, the people who are shifting their stop losses, they are of two kinds. One kind is who will shift cost to cost, that I will not incur any loss from here on. Even if my 1.5x is eroded, I will not incur any loss. Only loss will be my holding period, that time loss. And another kind of people are there who will shift it to the nearest swing of the trend. So if I see the nearest swing here, logically this is only the nearest swing where we were having our stop losses, and cost to cost is also here. So I cannot shift my stop losses to here. These are illogical areas. It might happen there can be a red candle and then it can go up, hitting my stop loss. So logically, cost to cost is what I can do. I cannot go more than that. Anyways, from March 25th, April, May, June, 2.5 months already gone by, and we are still into the trade. Let's make it more wide. So you see, every green candle, I can tell with 1000% sureness, each one of you after every green candle would have thought from now it will go up. Each one of you would have thought after every green candle it would have gone up, because that is how we retail traders think. We make our plans, but we are unable to stick to it because we are very emotionally attached. Here also, everyone will think from here it will go. But when an investor is totally neutral, he is not affected from these green red candles. He knows very well, I will simply exit at cost to cost, or I will take my target and exit. Since it has been very long time from May to September, even if I get my target somewhere here for 2 rupees, 3 rupees less, I will exit. I will not hold on to that much. That's it. No more headache. So we would have exited. We would have exited, I think, here only, in this week only, near 1600. Practically, we would have exited here only. We would not have waited for another 1 week also. Exited here only. So it took almost 25th March to, you can say, this candle is September. So March, April, May, June, July, August, September, 7 months. So a mid-term investment where your loss was almost, how much is this one? Target is 249, 250. So 250 we got 3 times. So our stop loss was somewhere divided by 3, around 80 rupees. 80 rupees was our stop loss, and we got 250 rupees, somewhat. And we simply exit. That's it. So in Kotak Mahindra Bank, after 2010, we got our entry on the same setup in 2019. So this doesn't mean that 9 years gap will be in every stock. This was only based on this strategy. We will have multiple more strategies which are more what should I say, which will give you more confidence in which market conditions, which strategy to use, which not to use. We also gave one stop loss. We gave 140 rupees stop loss also, remember? Then we got 250 rupees. We got 51 rupees. So everything is probability, simply. So we will discuss more on this in the next discussion. We will have, our topic is riding with the trend. People say trend is your friend. So now today we discuss this one. In the next one, we will discuss what if there is an uptrend and then sideways. Then should we go for this? Or should we think that it has already gone too much? We should not go for this. So for these questions, we will address it in the next discussion. So that would be it. We will again take random stocks to discuss it more. And maybe after few discussions, I will hand over the control to you guys. You guys can open the terminal and select one stock and try to analyze it yourself. And I will be the audience and you will make me understand. That will give a much more better understanding. So that would be it. If you have any doubts or something else, please shoot. Karthik ji, over to you.